Good afternoon, good morning, good evening, everyone. It is the 26th of January, 2021. It is 8:44 a.m. Eastern Standard Time. Taking a look at the current leader of the majors we've got going on here is the Kiwi dollar, NZD, USD. Looking at this guy here, I've drawn a Fibonacci retracement on the 4-hour chart from the most recent swing low at around 70.96 to the swing high at 73.15. That was on the 6th of January. And just looking at how sustainable is this current rise. So inside of this, this is a Gartley pattern. This is a Gartley pattern known as a Gartley pattern. That's the shape of it. And the Fibonacci ranges that are established have generated this setup here. Also note that on the inside of it, I've seen a lot of these patterns over the last couple of weeks, but there is a pretty textbook head and shoulder pattern inside of all this here that we have observed it break. So we've had a break of the neckline, and if we do an extension of the head to point B and then down to the right shoulder, we should see a confluence zone occur near where D is at. And we get close to that 886 extension, the 886 retracement level, which is where we would expect to see the potential reversal zone. That splits the 100% extension and the 886. So this is a pretty key zone to look for a probable change in direction. It can change anytime between now and then, but definitely if you're looking for a short opportunity, right up here on the Kiwi dollar, that is one that we should be taking a look at. Let's take a quick look at the dollar index, because we've been talking about the dollar index being a player as well. See how that guy is doing. Dollar index is currently trading lower today. Notice that there wasn't, so we have head and shoulders patterns all over the place. Remember, we've got this one here. I'm just kind of drawing this one a little sloppy, but remember, we have this one that exists right here. And then we have another that has shown up right around here. So this could be signaling further downside pressure for the DXY, for the dollar index. And it's no surprise that we see the head and shoulders pattern on the dollar index, while on another dollar pair, the inverse, we see that inverse head and shoulders pattern we just saw on the Kiwi dollar. So definitely a lot of things to look at here. However, when we're looking at the oscillators on a weekly chart, the dollar index still looks really good for a corrective move higher. We look at the Kiwi dollar, which is doing very well right now. It has finished the RSI has completed. Either way you want to look at it, a 3 or a 5 wave higher, and we're approaching some resistance zones there. This is the highest RSI reading on the weekly chart for the Kiwi dollar that we've seen since June of 2011. Talked about that a little bit yesterday. You can see that there's evidence of a probable double top here as well. On the composite index, if we look here, and if we read this, this is the current level of the composite index. We're right at this historical resistance zone for the NZD USD. So we have a top here that was established in 2007 that generated some downside pressure, and then we look back to 2009 in August, the week of August 24th, and then the week of October. Week of October 5th, 2009. So all of those resistance zones that we have up here for the Kiwi dollar, US dollar, we are seeing some pretty strong case for some downside momentum. Now, do take a look, though, that if we look at these prior ranges, let me just put the vertical lines here. It's a good point to make here about why you need to use more than one oscillator to determine if something is too extended or not. If you look at the composite index itself, especially the first one here, that first reading that we look at back in 2006, December of 2006, even though the composite index was significantly higher, we didn't see the RSI at an extreme. All right, the RSI was above 60, and all we saw was a trend continuation higher while the composite index moved lower. So there was a pretty lengthy divergence on the weekly chart, and that existed for quite a while, so be very, very careful of that. Then we get to the next high here in the composite index. That was in 2009. There was a fallout lower from, we'll just say 75.40 all the way down to 74. It's about 1,000 pips further south. But again, the RSI was not at an extreme here, and we saw it just continue to trudge higher. This is a little different situation. What we've got going on here is we have this elevated level, and I believe, yeah, this is either going to be the second or third highest composite index level on the weekly chart. But if we look at the RSI, though, the RSI is at an elevated level compared to the last 15 years. This is a fairly high RSI reading. So just be on the lookout for that, be aware of that, and pay special attention. The RSI level itself, we are near some historical resistance zones. So just be aware of that and watch out. I'm actually curious if we do a Fibonacci extension of these swings. Yeah, we have moved beyond the 100% extension. So this could be very much overdone. At the same time, just be aware that, that the Kiwi has been in a downside move for a while. So if we do see any pullback, probably it'll just come back down to that 68, 69 value area before continuing higher. But in the meantime, watch for any weakness at these elevated levels. And I'm definitely looking for a short opportunity here, waiting to see it pan out and set up. Thank you for watching this video. And from all of us here at Exchange Rates UK TV, please don't forget to like and subscribe. Thank you.